Good morning. Welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I am charging 500 rupees per month. You will get live calls in the groups as well as a guideline to buy and sell in the options in the future. And most of the trading will be done in the Nifty, and occasionally we go with the Bank Nifty. Let's go to the prediction review of Thursday, and then Monday prediction also followed by it. On Thursday, the market has closed 11,416.95, 169.40 points in the positive, 1.51% in the positive, opened around 11,364.45, low went around 11,347.05, high went around 11,428.60. Let's go to my prediction review. I have given in the calls on 1st October, the prediction which given in the group around 8:56 a.m. with the impact of SGX Nifty, because we already given on the Wednesday itself anything closing above this particular level 11,239.97, indicating tomorrow trend is bullish. So clearly mentioned at 3:13. So that specific point above only the market has closed on Wednesday. So people would have bought it in the call option. So that is the reason it has opened the gap up, and around 8 p.m. in the evening, the market has already up around 105 points in the SGX 50, around 11,359. So these are all the specific indications which we need to keep some lots in the call option, or maybe in the future we should have to buy with those. And as per the SGX Nifty indication, the levels also given, the date range which is 11,349 is the exact low. So 11,349, you can say 11,349.05, and in our data 11,349.04. See how much minute difference only it has. So our data will be like that. But what kind of a trading day it is, because of the SGX Nifty shown in the gap up, so the market has opened, but the 5 minute chart indicating the fall down may happen, but still somehow we clearly told about the specific day is not going to be easy, so we need to avoid this specific trading day. And we holded one particular call option for the insurance which we took 11,300, as went up 99 plus, and it has closed somewhere around 120, I think, because we hold it for we bought it for somewhere around 11. I have specifically pointed that safe traders must have to stay away from this kind of market, because this kind of market is which not going to be easy to trade on, and you won't get profit, and only high risk trader, because this might have give chances to ended up in the negative side, as which means your prediction may go wrong, or the options which you bought may not give you profit because of the moment, because it is going to be a unpredictable day, because it is a fresh day of the month, so we don't have the frequencies. So that is the reason I have pointed out this specifically for the safe traders must have to avoid this trading day. Specifically I pointed out. So the calls given in the group was very limited, that too with the high risk traders. So we bought it, we asked to buy it somewhere around 11,300 if it comes to 3.5, but it is already gone hit that particular target which we focused on, because our focus is on the level of 420, 423 something, because this is the next level. So if it is not reaching before the market closing, means we would have bought it somewhere at 3 not I mean 3.05 range, because that time it was traded somewhere around 20 or some 19 range. So that is the reason, but somehow this 11,423 target was got it, so we didn't bought. Somehow we bought it some put option with which will be somewhere hero zero kind of a thing, so it might go to zero as well. So that kind of stuff we did, and it is not worked for today, and the target was as expected, it got hit. 11,423 got it. We know 11,428 is the high. 11,428 is the high, because our target normally keeps the 10 point stop loss, so it has matched with the high as well. So on Thursday it was not that much good day for us, because we specifically wanted to trade for the high risk traders, because that high risk traders, small money like 1,000 to 2,000 is not going to make big impact. And the amount which we lost it somewhere around 3,475 on this particular day, but we made some 5,000 rupees profit, which we hold it this particular 11,300 for 11 rupees. We bought it somewhere 10 to 11 asked to buy, and it has went almost 117, while around 315 to 320. So we got some small profit on that. So it is not a good day, because almost we lost it some 3,000 here, 3,400 here. We got some 5,000 rupees profit, which is not a good day for us, but still it is fine. But overall it is a good day for us. These are all the calls which are given for the entire month, which is the calls will be provided those specific days. The low risk traders have to exit on some the same calls, which will be high risk traders will be wait and close on the higher profit margins. Sometimes it may go down if we not book. That is the reason low risk traders must have to book profit on some levels, but after booking, for example 55, we bought it has went 90, but high risk traders they booked 123. Due to that, the risk is there. If it might go from here to once again to that 55, like that, it has a chance. So that is the reason between low risk traders and high risk traders. If you take a risk, it might give you a higher profit, but if you don't take risks, means the profit what you got you will earn. So that is the thing. This is the 1 week scenario, which means we used to buy some call option as well as put option, or specifically one put option, or some specifically one call option, which we hold for a week time. The idea behind that is, if you hold for such a time, it will give you a higher profit. Likewise the same, it has given one particular level which we bought it on this particular 11,300 put option. We given with a combination of two, which it has paid a good result, almost 35,000 rupees we got. The investment which is 2,250 only, but it has paid us for 1 week time around 35,000 in each levels. Overall, the profit which we made for the safe investors 18,980, and high risk traders 46,000, and for a 1 week tenure which paid off around 84,000. So it is a overall very good month for us. And these are all the combinations which for the 1 week tenure we bought it, which is 11,300 put option. We bought it somewhere asked to buy somewhere around 25 to 30 and 32 something, that range. While given that call, it was traded around 28.75, and the call option 11,800 call option. So both put together, the investment will come somewhere around 29, or maybe even if we take it as 30 and that is as a 17, so it comes somewhere around 47. Even if we take it as 50 or as a round of, the total cost will be 7,500 sorry, 3,750 is the total risk. If you buy those two options and holding for a week tenure, your maximum risk will be 3,750. If it is goes this particular 11,300, it has went around 500, it has closed, which means almost 37,000 rupees. So your profit will come somewhere around 35,000. This is the one kind of thing. Another set of combination, this was given at 18th, and then next set of combination was given at 21st it has given, and this time it was between 11,700 call option as well as 11,300 put option. So it has came after it has went on high somewhere around 59, came down once again 30. So that is the reason again we gone with the next set of combination. So both put together we can buy it for 45, means we can hold it for a 1 week tenure. So if you hold it means it will go to some level. So exactly that is what happened. It has went 500. So both time if anyone would have bought it and hold it for a 1 week tenure, they would have booked 70,000 rupees profit. This is the kind of a method we are following for a thing, and these are all the basic rules for the low risk traders. I myself comes in the low risk traders. I never trade with the high risk. The idea behind this is to make, because the low risk trader will have a lower amount of money in the account, so they need to book profit every now and then. So they need not to wait for the higher profit and lose your capital waiting for the profit, and instead of booking profit you may erode your investment amount as well. So that is the idea. We need to book profit 50% to 100% whenever it comes. So that is the idea behind that. High risk profile clients may have such a good balance amount in that particular trading account, but still they need to play with this condition with the limit of 5 to 10% of their investment amount. They need to take risk. For example, if they are having 1 lakh in their account, they must have to trade 5,000 to 10,000 as a maximum risk. They must not to take more than that as a risk. So that is the idea. Sometimes even the low risk traders also comes under this, whenever if they fall under this 5% to 10% category. Likewise, for example, if I have 15,000 in my account, so I can able to invest in an option around 750 rupees and hold for a week time or 2 days time, which the market having some kind of advantage. If I able to make some big profit, so I can able to come as a high risk trader once if it is falls under this 5% situation. On the week, buy and hold for a week tenure, which is nothing but we need to buy both call option as well as put option with the kind of a calculated method. The maximum risk what it has is both may go to zero. That is the maximum risk. So we used to calculate some risk appetite of somewhere around 3,000 to 4,000 or even 5,000 maximum. We can do that kind of a calculated risk. If we take that kind of risk, it may give you a enough profit of 30,000 to 40,000 rupees profit. Let's go for the prediction for Monday. The data is indicating ratio on the positive side 10:5, average indicating 0:2, weightage indicating positive 5.04 versus 4.53, but absolute frequency evenly poised, because we couldn't able to find the absolute frequency on the 1st of October. So it is going to be a tough day for Monday as well, which indicates all three results of possible evenly poised. 33.33% chances of bullish, bearish and flat, so which is going to be a tough day. So I specifically asked my safe clients to stay away from the market. You can bet a smaller amount of money like 750 rupees. That is the maximum you can take a chance, even though if you don't know the trend, or you can bet up to 750 rupees, because that much money you can able to recover from the market any day. So you can maximum bet 750 rupees. Apart from that, you need to stay away from the market. You need not to trade anything on Monday. If you know the trend, you can enter, otherwise you don't have to enter. These are all the support and resistance levels. So if anything opens above the volatile level 1, which indicates the bullish, anything open above 69 or 70 points above, which indicates the bullish with a stop loss of overall average, which is almost towards to the previous closing. So 11,004 not 6.60 is a stop loss you need to maintain for the bullish market. On the other hand, for the bearish market, anything opens below the volatile level, which is 56 points below, anything opens, we need to keep overall average as a stop loss. 11,426.65 is the stop loss for the bearish market. So anything breaks the bearish open target level, it may go to any extent 11,000. 11,234.25. If it is breaking, it will go to any extent on the downside. On the positive side, bullish open target level, which is 106. If anything break that level, it may go to any extent, which is 11,523. And these are all the thing. If the positive, for example, if the pre-market opening, anything opens below 57 point, which indicates the target negative target 1, negative target 2, and negative target 3, which is 170 points to 283 points. So downside we have a little heavier than the positive side, because positive side having around almost 600, but negative side is having 700, which means negative having little bit weightage comparing the positive. But as per the ratio, which indicates the positive as little advantage on the indication, so which means it is not going to be that much easy, because it has to indicate any one particular side, it should not show both sides. So that is the reason. But we can trade with the pre-opening. If the pre-opening is even somewhere around above 55, something like that, if it is pre-open, means it has a target of positive target 1, which is 76 points, and positive target 2, which is 207 point, up to 11,626 we can expect to move. So we have the range of minimum side, which is negative 283 to 200 points on the positive side, which is not going to be easy to trade. Whenever we have these kind of huge numbers, we need to play very much safe. That is the reason I asked my clients to stay away from the market, specifically for the small clients. Small traders who are having lesser amount in the trading account, they can trade with the maximum risk of 750 rupees in the options, not more than that, to invest. That is the condition. On the high risk traders, they can able to invest with the amount of tolerable risk, which they know which kind of amount they can able to put into the market, because it is not going to be that much easy to trade on Monday. If we know the levels and if we know the high and low, then we can trade. Let's see how the market is going to give us on Monday. Thank you.